How's it going, everybody? It's going to be part 3 of our ATAS series. If you guys haven't watched part 1 and part 2, be sure to check those out. I'll put them in the description below. But in this video, we're going to be talking mainly about my 1-minute charts. These two charts right here, mainly I use them for ES and NASDAQ. I'm also going to close up the video and give you guys a little rundown on how I watch the tapes and how I watch the DOM as well. So starting off, obviously, if you haven't watched the first video, go ahead and watch that. You'll be able to grab most of my settings. But in these videos, or sorry, this video, I will show you my settings for the 1-minute chart, mainly my indicator settings. So what I'm going to be showing you and what I use every single day on these 1-minute charts are a couple of major indicators. The biggest ones are VWAP and cumulative delta, as well as the 24 EMA. So when I'm looking at this chart here, obviously it looks a little messy. There's a lot going on. So let's break it down piece by piece. So the dotted line here and the solid line, the ones that are green and red, these are the two VWAPs that I like to watch on the 1-minute chart. The dotted VWAP is the session VWAP. That's the VWAP that starts at 6 p.m. Eastern the prior day, because that is the session open for the S&P 500 and the NASDAQ futures. So if you guys are trading ES or NQ, you want that session VWAP to start at 6 p.m. Eastern the prior day. The solid VWAP is the daily VWAP, the cash VWAP. What they mean by cash is starting at 9:30 in the morning, right at that New York open. So that one starts at 9:30 and it goes until the market closes. Now, typically, both of these VWAPs are going to follow each other pretty much spot on, same level for level. But the daily VWAP is obviously going to be a little bit faster in the morning because you're starting fresh right out of that 9:30 open. And I treat them the same exact way. I don't really put more emphasis on one VWAP or the other. They are both very strong levels. Okay, moving on to the next indicator. The orange line here is the 24 EMA. Why do I use a 24 EMA? I like to use the 24 because that is kind of my slower moving average. Sometimes I will use the 8 EMA as my faster moving average. And on stream, you guys will hear me talk about how the 8 EMA is the aggressive traders and the 24 EMA is more of the passive kind of pullback traders, the responsive traders, if you will. So if you put those two together, you can see if the market is actively bouncing off the 8 EMA and it's not allowing price to break through that 8, then the market is extremely aggressive. The traders that like to market trade, the traders that like to momentum trade, they are holding on to that 8 EMA and pushing price in whatever direction you are trending. But if the momentum traders are not in control and they are allowing it to break that 8 EMA and pull back into the 24, let me make this full screen. I'll show you what I mean here. So kind of like on these pullbacks here, you're not exactly testing the 24. A few of them you are, but you're pulling back towards that 24. That is the responsive traders. This is a better example right here. You can see we're breaking out to the upside, but it's pulling back to that 24 EMA and allowing the market to kind of profit take, right? If you have those people taking profit, it will most likely pull back to that 24, but that doesn't mean the trend is over, right? It doesn't mean that uptrend is over. It just means they're allowing the buyers to take profit and pull back a little bit. So as long as you're staying above that 24, then that trend is stable. It's just not as aggressive as if it was holding above the 8 EMA, which is this one here, the dotted line, the cross line, I mean. If you're holding above that 8 EMA, like this trend right here, then it's extremely aggressive. But as you can see, once you approach a top, it will start to break that 8 EMA. It will start to chop through that 8 EMA, which typically means it wants to pull back to that 24. And as you guys know, I'm not a very big moving average trader. I don't use these moving averages as like an exact science. I don't use them to enter and exit trades perfectly. I just like to look at them and see how the 1 minute chart is trading around the EMAs to get a general idea of who's in control of that trend. As I said earlier, if they're constantly staying above or below the 80 EMA, then the aggressive traders are in control. If they're constantly pulling back to the 24, then the responsive traders, the pullback traders, are most likely in control. Okay, the other main indicator that we like to look at is this one down here, the cumulative delta. So what delta is showing you is the aggressive traders. As we said earlier, with that 80 MA, we like to watch those aggressive traders. This is another way that we like to watch the aggressive traders because delta shows you the aggressive market traders. People who are using those market orders to either market buy into the ask or market sell into the bid. Okay, so we like to see where that trend is going. Is it trending up? Are we putting in higher highs and higher lows? Are we trending down? Are we putting in lower lows and lower highs? And this is the most important part. Is that trend being respected by the price chart? Okay. Are we seeing a divergence in that delta? So what I mean by divergence is if the delta is continuously putting in higher highs and higher lows, is price also putting in higher highs and higher lows? Or is price doing a completely different market structure, right? When delta begins to diverge from price. So let's say price is constantly putting in higher highs and higher lows, but delta begins to put in lower highs and you start to see a lot of sell pressure on the delta. That typically indicates that your trend is starting to come to an end, or it needs to stabilize and kind of relax for a little bit. That uptrend needs to kind of pull back possibly to the 24 EMA or just go sideways for a little bit. Here's a good example right here. So look at the delta on this push here. You can see price starts to push up, but delta starts to pull down a little bit. So delta is aggressively selling off before price begins to sell off. So it kind of indicates that it needs to cool off a little bit. And you can see as you rise, the same thing kind of happens up here. Delta is a lot slower than price, just indicating that it needs to cool off for a little bit and possibly look for lower value. So you want to look for when delta and price are not agreeing with each other. This can be skewed by a few different things. Okay. If you're watching the cumulative delta and you're seeing a lot of block trades come in, here's a great example right here. If you have a lot of block trades coming in, then delta is going to be moving in the direction of those block trades. Same thing will happen with sell walls and buy walls. When that is happening, when you're seeing a lot of block trades come in, when you're seeing price hit these sell walls or buy walls, you can't trust delta as much as you typically do. So if you see a lot of block trades coming in, let's take this for example, you kind of have to sit back and not watch delta as much. Don't use delta for that reason that you want to get in or out of trades. Let the market cool off a little bit. Let the block trades stop flooding in. Then we can start respecting delta again, right? And I know this is a lot of information, but I'm trying to give you guys everything that I use these 1 minute charts for. Now, for every little concept, like the block trades, I will have videos on my channel. For example, we have a block trade video. If you want to learn more about that, just take a look at my order flow playlist. We'll go more in depth. But for this video, I'm just trying to give you a good understanding of what I use these 1 minute charts for. Okay, so mainly with delta, we look for that trend. We want to see it trending with price, or is it diverging from price? And that can give you an idea for when price is bottoming out or when it's topping out. As I said, I'm not going to give you too many examples of that. We'll talk about that in its own video. Another thing that I like to use with the delta, and I'll go into my settings here. With the delta, here is the CVD. That's what the delta is. I like to have a moving average. If you see this moving average on my delta, this is on a 1 minute chart. So I like to have a 1 hour moving average. So to do that, I need a 60 EMA. So right here, I have a 60 EMA tied to the delta. So if you go to source, you want to tie it into the delta as your source. And then you want to put it on the same panel as your delta indicator so that it looks like this. So that moving average is on the delta chart and not on the price chart. Okay. And what I like to look for with that 1 hour delta moving average is same thing we talked about earlier. Where is the trend? Is it consistently trending above that moving average? Are we trending below that moving average? What is the trend? Are we pulling back to retest it? Is it being respected? That sort of thing. You basically treat it the same exact way you would treat a normal moving average on a price chart, the same way we treat the 24 EMA. So if we're constantly trending above that level and we start to have these pullbacks, look at this pullback, for example. We have an aggressive pullback on price. Delta pulls back a little bit, but it's not as aggressive as it is on price. And if I zoom in here, you can see that we are not breaking that 1 hour delta average. We are staying above that delta trend. So therefore, we know that that move is possibly being absorbed. It's a little bit of an overreaction. You're selling off quite a bit, but you're not really seeing as much bearish delta as you would typically look for on a move like that. So we could kind of infer that we're probably going to bounce off that delta average and start to reclaim that 24 and then start to go back into an uptrend. And that's exactly what happened on that pullback there. So you want to make sure that your delta coming in matches the price action. When it's not matching, that's when you have the divergence. Okay, moving on to the next indicator. The next indicator that I like to use on my 1 minute chart are these horizontal boxes here. These horizontal boxes are from this indicator right here, the stacked imbalance indicator. And for the most part, it's pretty much default settings. But if you want to match my settings, there you go. You can copy and paste those from my stream. But basically what we're looking for here are these delta imbalances are being created when you have a delta imbalance, right? When you have a lot of delta on one side and not the other. So a delta imbalance shows you when one side is heavily outweighing the other side. It is imbalanced, right? So when the buy side, when the buyer delta is way higher than the seller delta in that general area, it will give you the delta imbalance. And it will show you where that zone is with this horizontal box. So you can think of these as kind of support and resistance. They're not exactly the same. If you guys are familiar with like fair value gaps, it's similar to that, where you just have such a strong imbalance in that level, you're getting a lot of buy pressure initiating a move up, or a lot of sell pressure initiating a move down, okay? If you guys are familiar with my very old kind of point of origin technique or an order block technique, it is very similar to that. So one thing you see with these delta imbalances is they are very often retested price likes to retest these points of interest that caused a new move, right? An initiative move. So as we can see, look at these boxes here. Nearly every single box that I have on my chart is being retested because price likes to retest those points of interest, right? The point of origin, the order block, whatever you want to call it. You had a lot of momentum come in a very short period of time that caused a spike. It caused an imbalance in delta. Okay. Think about it as an LVN, if you guys are familiar with volume profile. Once again, I know I'm throwing a lot of topics at you. We have videos for it on our channel if you guys are not familiar. But if you are familiar with LVNs or kind of low volume areas, very similar. You have price spiking through a certain level, but because it spiked so quickly, you didn't really have the opportunity to auction in that level. So therefore, price likes to retest that area to determine, do we actually have value there? Or was it just kind of a one-off event? Okay. If it retests any of these imbalance levels and it shows you, let me see if I can find an example. Kind of like this example right here, this really long-lasting imbalance level. Here's a better example. Let's go back here. So if you see this imbalance right here and you see this retest, if it retests that level and it kind of starts to wick immediately off of that level, it is showing you that price does in fact reject that level. And don't let me confuse you with the word reject. Reject is not inherently a bearish thing. It means that price does not want to trade consistently on that level. It wants to trade away from that level. So in this example here, if price pulls back to that imbalance and it begins to immediately bounce away from it, it is telling you that the buyers and the sellers are rejecting that price. They want to trade away from that level. So if we're in an uptrend, what does that mean? If we want to trade away from that level, we are going back into an uptrend, okay? So we pulled back, we tried to break that uptrend, it rejected it. It wants to trade away from that level, so once again, it starts to rise. Same thing we saw back here. Rejected the level, continued upward. Same thing here, rejected it, continued upward. Okay, so we look for those rejections that want to push it back into that direction. They want to push it back into that trend. They're not always going to be that clean. As you can see, it fills them and kind of chops around a little bit. They're not an exact science. You just want to look for that price rejection and then look for it to pull back into whatever trend it was already in. Very similar to this right here. You had a lot of sell pressure come in, you bounced into it, and then rejected that price and continued downward. Okay? That is pretty much it for the indicators. Now let's talk about what else I look for. I'm going to hide all my indicators here. Oh, sorry. One last indicator are the block trades. So my settings for my block trade, here you go, if you want to match them. Like I said, I'm not going to get into the block trade concept. We have a video on that. But basically what they are they are very large orders. They're clusters of very large orders. So we like to see where those large orders are coming in and are they being protected. So if a large order is coming in here, it's a very bullish order. Are they actually buying that level? If price pulls back to that level, are they continuing to buy that level? Or are they grabbing liquidity? But yeah, that's all I'll say about that. If you want to learn more about that, watch my block trade video. Okay, I saved the most important part for last. So hopefully you guys are still here and you're hanging around. Let me hide all my indicators. And this is the most important thing that I use the 1 minute chart for. So what I like to look at on the 1 minute chart is market structure. I don't really care about the individual candles. I think too many people have a 1 minute chart like this and they just zoom in and they stare at these 1 minute candles and they allow every single green move, every single red move to pull them in a direction. It makes them very emotional, right? The way that I like to look at a 1 minute chart is like this. Is like a zigzag, right? If you guys are familiar with a zigzag indicator, that is how my brain is interpreting the 1 minute chart. I don't care about every single little candle. I care about the market structure. Are we putting in higher highs? Are we putting in higher lows? Are we double topping? Are we double bottoming? Everything like that, right? Candlestick patterns, not as an individual candle, but as a spectrum of mini candles, okay? So if you guys struggle to do this in your head, that's what the zigzag indicator is for. It makes this easier for you. If you want to look at my zigzag settings, I believe they're mostly default, but here are my settings for that indicator. It's called Zigzag Pro on ATAS if you guys want to throw it on your chart. And then I just have it showing delta. I don't usually have this pulled up. I usually only pull this up if I'm trying to make a point because I'm just doing this in my head for the most part. But if you guys struggle to see market structure, just throw that indicator on there. But okay, I'm going to leave this indicator. I'm going to turn this off for now. And I'm going to talk about exactly what I'm looking for. So let's take today's open, right? Today's open, we opened up. It was a little choppy. Didn't have a very clean price action. If you're zooming in too close to these candles, this was chopping you up like crazy. But if you zoom out and you only care about the market structure, what are we seeing? Right away, we put in a higher high, we put in a higher low. And then we continue. We put in another higher high. We put in another higher low. And yet again, we continue, right? So we want to look for those big changes in price. Are we breaking important levels? Are we breaking into new highs, new lows? Are we kind of stalling out? Like right here. Are we distributing? Are we accumulating? What is our trend telling us? And then when we do start to kind of range out like this, we chop out like this, that's when we have to throw in all those indicators that we were talking about. Throw in the delta, throw in the 24 EMA, throw in the volume profile levels, and figure out, are we stalling for a reason? Like, are we stuck on the value high? Are we building a node? Are we stuck on the POC? Why are we stalling? Right? Don't stare too much at the candles. Who cares what direction the candles are going? That does not matter. We care about the overall levels, these highs, right? We're consistently putting in highs on that level. We're consistently putting in lows on that level. That's what we care about. And like I said, use the other indicators to figure out, why are we stalling here? Should I be leaning bearish? Should I be leaning bullish? A couple of patterns that I like to look for in distribution like this, we talk about in stream all the time, the rollover tops, right? So what I look for in a rollover top is if we have a big explosion to the upside, and then we start to put in a distribution like this, and then we start to very slowly put in lower highs. Let me see if I can find an example. Today was very bullish, so it's kind of hard to show you an example. Kind of like this area right here. So we had an explosion up, and then we very slowly started to put in these lower highs. And the price just started testing lower prices. They weren't very obvious about it. They just started testing lower prices here and there. Like here's a lower price, right? Here's a lower price, and then it starts to leave that entire zone. But keep an eye on those lower highs. Keep an eye on that shift in the market trend. Look at the difference in this move here and then this move here. Higher high, higher high, higher high, yet again and again, right? But then right here, nasty sell-off, lower high. So why is price stalling here? And that's what we use our other indicators for. We ask ourselves, okay, I see this lower high on the 1 minute chart, but why is it stalling here? Is there a very important level that I should be looking at? And that's when I go look at my volume profile chart. And I see, okay, is there a value area high here? Is there a POC here? What is the reason for this market structure shift? And if there is a very good reason, then how do we trade that? If there's a very good reason, then maybe we could short this. Maybe we could throw our stop loss above that high and we could look for this sell-off. So you want to be using the 1 minute chart not as a bar by bar signal. Look for the structure, look for the trend shift. That will give you the much longer, the much bigger signals to trade, right? Okay, so once you start to see that weakness, once you start to see that trend shift, then we watch for momentum, then we watch for those significant candles. Kind of like these candles right here. You can kind of get an idea just by looking at the candles. Look at the average. You can just see the size of these candles. They're all about the same size. But then you have these occasional candles that are just much larger. These moves that are much larger than the average, right? Like look at all these giant red candles here. They're much larger than your average 1 minute candle. That's when you want to pay attention to the exact candles. You don't want to zoom in all the time. And when you see those really large relative candles, once again, ask yourself, why is it happening? Are we on an important level? Are we hitting a value level? Are we hitting VWAP? Then build your trade plan, right? Let's say it's hitting a value area high. Let's say we're sweeping a value area high. How can I trade this? Okay, when price starts to retrace back below that value area high, I'm going to take a sell. I'm going to put my stop loss above the local 1 minute high, the local value area high, right? So if we pretend that this is a value area high right here, and we start to put in those lower highs, and I like that trade, I can sell that, put in my stop loss above that 1 minute high, and then trade it down to those remaining value levels. Rotate down to the POC, rotate down to the value area low, stuff like that. But okay, I don't want to beat this into you too much, right? Long story short, don't zoom in too much. Do not fall in love with every single 1 minute candle. It's going to drive you crazy. It's going to make you emotional. You want to zoom out. Imagine the zigzag or throw on the zigzag onto your chart if it helps. Keep an eye on that structure. Watch the higher highs, the lower highs, the lower lows, etc. Keep an eye on the general trend, not the extremely local trend. Okay? All right. Hopefully that makes sense. If it doesn't, just leave some comments below. I'll help you guys out. But moving on, let me just quickly go over my tapes. I'll talk about how I use the DOM, and we'll call it a video. If you guys haven't already hit that like button, be sure to subscribe. I appreciate all the support. But all right, moving on to the tapes here. What am I looking at when I'm reading these tapes? And what I mean by tapes are these, the time and sales. What I'm looking at is just the flow of orders. The clusters of orders as they come in. If we're sitting on a high, if we're sitting on a low, am I seeing a lot of buy orders come in? Am I seeing a lot of sell orders come in? What is the overall pressure of that tape? If we're sitting on a value area low and I'm sitting here thinking I might want to buy this, are we actually seeing buy pressure on the tape? Or am I completely knife catching this? And what I mean by knife catching is I'm buying at a time that there's just immense sell pressure. If you know you're knife catching, that's fine, right? But if you want to be trading with some kind of momentum, we need to see that momentum on the tape. We need to see those clusters of buy orders coming in. They don't need to be very large. They don't have to be block trades. We just want to see consistent buy pressure on that level. Let's pretend that the level that I'm watching is around 67. You can see all these orders coming in here, 67.50, 67 quarter, 67, right? That looks good. But are we seeing consistent sell orders below 67? What if I keep seeing orders hitting 66, 65? Then that level is probably not being protected as much as I would want it to be. You guys hear me talk about, is this node being protected on stream all the time? And what I mean by protection is when you see those orders coming in on the tape, when you're watching the DOM, do they keep allowing it to go through that level? Do they keep allowing it to trade on the other side of that level? If I'm bullish, the other side of the level would be below the level, right? It'd be bearish. So if I like the 67 level and I want to take a long there, I don't want to see consistent orders constantly hitting 66, 65. It should barely be going below 67, if at all. Okay. Another thing I look for is how liquid is the market? Are we seeing a lot of liquidity, or is it a very thin market? If the market has a lot of liquidity and they can handle a large influx of orders, you will not see any blue orders. You see these blue orders? Those blue orders are level 2 orders. They are breaking the best possible price. Okay? What that means is, if we're looking at the level 1 here on the DOM, the best possible price on the sell side is this level right here. The best possible bid is this price right here. But if I take a large enough order, I will get what's called slippage. I will be trading through that best possible price. I will be hitting the level 2. It's called level 2 because it's above or below the best possible price. Level 1 is the best possible price, right? Okay, so if the market is extremely illiquid, doesn't have a lot of liquidity, you'll see this typically around the open and typically around the close or around data releases. Okay? You'll see a lot of level 2 orders, a lot of blue on your tape. Now it's blue because my settings are blue. If you guys have different settings, it's this one right here, above ask, below bid. I have mine as blue, if you guys want to match the settings there. But okay, if we see that data come out, typically you're going to see a lot of blue orders because the market makers do not want to trade that extreme volatility coming from that data release. So they will pull their orders out of the market. And when they pull their orders out of the market, the likelihood of hitting the level 2, getting that slippage, is much higher. Therefore, you will see a lot of blue orders on your tape. So we know that if the liquidity is very good and they are not pulling their liquidity from the market, we should not be seeing a lot of those blue orders, those level 2 orders. The tape should look like this, where it's mostly level 1 and then occasional level 2. Seeing the level 2 orders every now and then, not a big deal. If you see them consistently, like we do around the close and the open, that is because the market liquidity is being pulled, or there's just so much so many orders flooding in. It doesn't matter how much liquidity is in the market, you're still going to hit the level 2. The speed of the tape is just too high. Okay, and that's the other thing I was going to talk about is the speed of the tape. I can't really show you because the market is pretty much closed right now. But as the orders are flooding in, there is a yellow indicator on the side here, and it will show you how quickly those orders are coming in. So if the market is just flooding in orders, you see how that yellow is popping up right here? It will be very yellow. So I know to be careful. If I'm trying to enter or exit a trade and I see a lot of yellow coming in on the tape, I'm like, okay, maybe I want to wait a few seconds, let it calm down a little bit. If you're putting in a lot of orders during a time of very high speed, then you're likely to get slippage. Okay. And slippage is just where you want to get filled and where you actually got filled. There might be a difference in those two orders. Okay, the other thing I look for is this bar right here. It just shows the overall buy and sell pressure. Basically what we were talking about earlier. If the tape is very green, it will be very green, so on and so forth. Nothing too crazy about that. Okay, last but not least, let's talk about the DOM here. I only look at level 1 orders, so I can't even really call this a DOM, because typically with a DOM, you are looking at the depth of market. Okay. You are looking at the level 2 orders. You are looking for where the resting liquidity is sitting in the book. I'm sure you guys have seen many programs that show you that information. I don't care about that information at all. I don't care where the liquidity is sitting. The reason I don't care is a lot of the times that liquidity is fake. It's called spoofing. Technically, it's illegal. In a lot of cases, it's frowned upon. But they still do it. And what spoofing is when you see, let's say, an extremely large order on a certain level. Let's say 10,000 contracts at 5,700. And then we go to trade at 5,700. And guess what? Those 10,000 contracts, nowhere to be found. Completely gone. Now, maybe that was a real order and they just got scared and they pulled it. But a lot of the times, they're not real orders. They're fake. They have no intention of being filled whatsoever. They are using their orders to mess with the brains of retail traders or other institutional traders. So therefore, we can't really trust a lot of that liquidity that we're seeing on the DOM. Another thing that's very common, I'm sure you guys have heard iceberg orders. What is an iceberg order? An iceberg order is when they're showing, let's say, 500 contracts. And then it starts to trade into that area. And they do trade 500 contracts, but that's not all. It keeps trading 1,000, 2,000, 3,000, 4,000, keeps going, right? You're only seeing the tip of the iceberg. That's why it's called an iceberg order. They're showing you maybe 500 contracts, but they really want to get filled maybe 5,000 contracts. You'll see this very often when you have walls. When you have a buy wall or a sell wall, they'll only show you a few hundred contracts, but they'll trade thousands of contracts. Okay. All right, with that out of the way, what am I looking for on the DOM? Why do I only look at level 1? So what I'm looking for is when we are trading on a certain level, the same way that I read the tape. Who is protecting that level? Is it being respected? If I want to buy a level, let's take 68 for example here. If I want to buy 68, is it allowing price to consistently trade below 68? And I watch how the orders are coming in on the DOM here. Is it just constantly hitting into 67 and flooding that level? Or is it hitting like a brick wall on 68 and consistently trading above it? Those are the levels that I like to trade. If I'm sitting on a high and I'm like, okay, I want to trade the Valeria high here. I want to sell it. I'm going to find a level on the DOM and on the tape that is being protected. That's where I want to enter. I want to enter on a level that is already being protected by other traders. Okay. So if I wanted to long 68 here, I want to see them buying 68. I want to see them buying 69. It's okay if it sells 69 every now and then and pulls back to 68 as long as they keep buying 68. As long as they continuously protect that node, it's okay. I don't want to see constant sell pressure below 68. That level is weak. All right? So that's what I'm looking for on the DOM. How are they protecting every level? How are they protecting the nodes? Okay. Mainly, I'm only watching the tape and the DOM when I'm like hovering over the buy and sell button. I've already made up my mind for the most part. I've already decided I want to trade this area. They just help me decide the exact level that I'm going to trade. Okay? And that's pretty much it. I was going to go over this chart, but honestly, guys, I've talked about this chart so much on my market profile videos and my volume profile videos, and this video is already 41 minutes long. I'm not going to talk about this today. Just watch my market profile videos, watch my volume profile videos. If you guys want to learn about this chart down here, it's the exact same thing. But all right, guys, I hope you guys enjoyed this video. It was a little bit longer than I wanted it to be. If you guys would like to sign up with ATAS, check the first link in the description below. Make sure to use code DejaBrew5 when you're checking out. If you guys are not fully decided on ATAS yet, you still want a little bit of time, you want to try them out, sign up to their free version. Send me an email, admin@oasistrading.io. Let me know which email you signed up with, and I'll get you a 30-day free trial. But all right, guys, hit that like button. Be sure to subscribe. I'll see you guys in the next one. Peace, everybody.